Hello, everyone, and welcome to today's webcast on COVID-19, financial and emotional well-being opportunities for your fund members. My name is Hank Kim. I'm the Executive Director of NCPERS. For many of you who've been tuning in regularly, my next statement may sound like a broken record, but for those who have not been tuning in and for their benefit, as we all adjust to the new COVID reality, please bear with us if there should be any technical issues or unplanned background noise during our webinar. As always, your patience and understanding is appreciated. We encourage audience participation. Please submit your questions by using the GoToWebinar portal. However, to ensure that we can cover all our topics today, we will hold your questions till the last part of the program. Additionally, in the handout section, you will find a PDF of today's presentation. Today's webcast is sponsored by Gallagher Benefit Services. To introduce his firm in today's webcast, we have Don Heilman. Don has over 30 years experience in the benefits industry working with large governmental entities. He has extensive experience in the design, financing, and implementation of comprehensive health and welfare benefit programs. He has significant experience and expertise in self-funding and recently has been active in the areas of consumerism and wellness. Don, the webcast is yours.
Great, thanks, Hank. Good morning or good afternoon, everyone, depending on where you're at. So first of all, let me just take the opportunity to thank you all for taking time. I know this is a crazy time, and certainly a lot of things are on the plates of folks, so I'm appreciative that you were able to join us and hopefully share some information with you that may actually support or enhance some of the efforts that you are accomplishing there with your local groups. Just first of all, a brief bit about Gallagher for those of you who are not familiar with Gallagher. We are a global risk management, insurance consulting, and brokerage firm. Work extensively throughout the United States and specifically have developed a very, very strong presence in the public sector. We not only work extensively with governmental clients in varying natures, but also have a dedicated national public sector practice that is dedicated to helping us deliver best-in-class resources to our clients. The three areas I would say that, let me take a step back. While we really are a very whole-based human resources and workers' compensation risk management consultancy, I work with Gallagher Benefit Services. I'm also joined today, who's going to help me by Sean Atkins, who's going to help me work through the slide deck as well this morning. Sean and I both work extensively on the health and welfare side. So we work with a lot of large governmental entities, helping them manage strategically compliance from a plan design administrative standpoint, both their medical and pharmacy programs, as well as their entire health and welfare programs. We do extensive GASB actuarial valuation and retiree health consulting work. And over the last, I would say, 5 to 10 years, we've really expanded our presence as a true human resources consultancy, doing substantial amounts of work in the areas of compensation, HR strategy development, employee engagement, and those types of things as well. In addition, on the retirement side of the equation, we certainly do have a broad defined benefit consulting and actuarial capabilities. We also do a lot of work in the defined contribution consulting space, and through our Gallagher fiduciary advisors also do substantial investment consulting work for pension plan sponsors. And that's just all on the Gallagher benefit side. And then, of course, we do a substantial amount of work from a risk management standpoint through our counterparts, Gallagher Global Brokerage. Hank mentioned to you that we work with NCPERS. We've been a proud partner with NCPERS for years. And in general, what we have done is tried to consistently identify services or programs that might be of benefit to NCPERS members in 2 different venues. Number one, that might be a benefit from an insurance or risk management perspective for the systems themselves, as retirement systems are supported by NCPERS. So the 2 areas that we have developed that certainly are not part of today's topic, but we have developed and we believe really strongly that they've been very successful programs are number one, fiduciary liability insurance that we've identified some very unique coverages and opportunities for very competitive pricing that we think is often under attended in terms of the public sector. And then more recently, we've developed and continue to evolve a cyber liability insurance protection program that also has some very unique attributes to it that again is available through a preferred relationship that we have to our NCPERS partners and members that NCPERS supports. So those are a couple of the other programs that we support on behalf of NCPERS. The balance of today's session then is really going to be focusing on two other programs that are not necessarily intended for the systems per se, but for NCPERS members at the end user. By that I mean the active members, the retired members that you all serve. So these are programs that have been around for several years, and we're going to cover those programs at a high level, but the real key portion of today that I want to focus on is a couple of unique opportunities that we have unearthed and negotiated with our vendor partners, specifically in response to the COVID epidemic. So Sean, I'm going to go ahead and jump into the slide deck if we could. And essentially, if you look at the next slide, just let's cover the agenda at a very high level.
Trying to get it to go forward to the next slide. Here we go.
There we go. Great.
Sorry about that.
What we hope to do for the balance of today's session then is for each of the two programs we're going to describe, cover a bit of the current landscape, and then we're going to, after we cover the current landscape, describe the programs at a high level in terms of what they were designed to do and why we believe they add value to NCPERS members. And then lastly, cover for each of those two programs a time-sensitive opportunity that we really think has some merit for plan sponsors and retirement systems to consider. So the first program, Shai, if you want to go ahead and move forward, is the current state relative to, I would say, financial well-being. So Sean, if you want to go ahead and move forward. Great. So should be no surprise to anyone that as we have looked at the massive shutting down of the economy and services throughout the country, public entities certainly are not escaping the dynamics of that challenge, both in terms of serving their constituents, but then in terms of financial implications. Obviously, revenues, sales taxes, whatever those revenues might be, are being challenged and dramatically affected, at least in the short term, and probably will even lag a little bit once the rest of the economy starts returning. So some real challenges fiscally and financially that we see currently and on the landscape. From an employee human capital standpoint, we're certainly seeing public entities are not immune from furloughs, layoffs, varying types of natures as they look at, again, serving the needs of their community at the same time, trying to manage their fiscal situations. That in turn is also lending to challenges with regard to compensation, the cost of benefits, how benefits are designed, both for the current workforce as well as how do we address those that we unfortunately may be furloughing or laying off. So those in turn are all creating the exposure that we see for the members, because many of you are doing essential work. Many of your folks are coming to work in general, and especially those those of you who are in the first responder world. Those folks are out there increasing their exposure to the virus, dealing with those kind of challenges. And even if they're not being exposed, they're certainly having other kinds of financial challenges, all of which kind of bubble up into, are they providing themselves the appropriate financial protection that God forbid, should somebody be impacted by these things, does provide for their household. So those are just some of the kind of dynamics that we're seeing play out here, especially for employers in the public sector. Next slide, Sean. So The program then, that first what we want to talk about is what we refer to as the Public Employee Financial Protection Plan. The primary objective, and just as a bit of background, this program has now been in place for probably over 50 years, has continued to benefit literally thousands of members across the country, paying out millions of dollars in benefits annually. The program at its core was designed to supplement and complement traditional defined benefit plans. As you see by the graphic, the green arrow is really kind of a typical pattern that you might see with a traditional defined benefit plan, where as you continue your career with a public employer, you'll see that the value of your benefits under defined benefit program continue to accrue and therefore increase in value. What happens, therefore, is early on in the career of a public employee, you had not accrued a substantial amount of that financial protection. And then over time, you'll see that they may be accruing some protection through their defined benefit plan. Most traditional employer-based life insurance programs, whether it's core term life insurance or supplemental term life insurance, typically provide a core amount of coverage that gets more expensive as the person ages. What we designed several years ago is this very unique concept that basically flips that in a different way and says, rather than having benefits that cost more as you go on, why don't we say, let's provide the same level of cost for the coverage, but provide a much higher level of benefits early on in an employee's career when they have not only have very little in the way of defined benefit accruals, but quite frankly, from a personal asset accumulation standpoint, really have not much assets accumulated as well. But at the same time, they're all buying cars, they're taking on student loans, they're taking on mortgages. They do have liabilities that they don't have assets sufficient to protect. So this program really tries to identify that core bubble, and that is to say, here's a level of coverage that you can purchase that early on in your career at younger ages is going to provide a very significant level of benefit at an incredibly affordable rate. That rate will remain unchanged through the course of time, but the benefit will decrease in exchange for the fact that hopefully through sound financial planning and accruals, some of those other financial sort of foundations will begin to come into play. So that's really what we're trying to put here in front of you graphically. So some more specific features of the program that we really do believe are unique are on the next slide. Thank you, Sean. So first of all, what you'll see here is this is very unique in many respects, including the following. While this program is available initially only to active employees, so long as they maintain the coverage up to retirement, they are also able to continue the coverage into retirement, which most employer-based life insurance programs, in fact, virtually all, do not allow you to do. The other aspects of the program that are very unique and designed specifically for NCPERS are we provide additional benefits, an accidental death and dismember benefit if you are either killed or injured severely in an accident. Again, not typically unique, but it's bundled in the program, which does make it somewhat unique. What is also very unique is the benefit is available if the death is related to work. And where we certainly see the opportunity and the increased essence of that benefit is the times in which we are finding ourselves today. So if a person is on the job, contracts the virus, is a first responder, contracts the virus, ultimately is tragically caused to lose his or her life, this benefit would pay the full level of benefits even due to the fact that the death was work related. So that really is kind of springboarding why we think this one-time opportunity that we're going to get to in a minute has some appeal to us, to you all, excuse me. The other part that's very unique about this program is it's by definition designed and administered as a default household benefit. And what do I mean by that? So regardless of the number of members of your household that exist when you enroll or as that household changes, there are benefits not only for the primary covered individual, the employee, but there are benefits available upon the death of a spouse and or the dependent children as well. So those are all baked into the design, all baked into the cost. And it's also fluid in that, let's say as a 24-year-old, you enroll in plan and you're single. 3 years later, you're married. That spouse, with no questions asked, no changes to the costs, automatically then becomes entitled to the schedule of benefits that's available for spouses. 2 years later, they have twins. Those two twins are automatically covered, available, have availability to the benefit. No actions required, they're automatically covered, and no change in rate. So again, it really is designed to be a household financial planning tool. So that's another important feature. Slide, want to move forward, Sean? Another tremendously important piece, and again, we're going to focus on this as we talk about the one-time opportunity in a minute here, but this program, upon initial offering for those of you who do not offer the benefit, and then annually thereafter, we allow members to extend an open enrollment opportunity to their individual constituents. When we say open enrollment, that means truly it is a guarantee issue event. We never, ever ask a medical question in order to sort of bind or confirm that coverage is available. So regardless of that person's health condition, so long as they enrolled during a qualified open enrollment period, the following effective date, they are guaranteed coverage, no questions asked. So again, that type of liberal opportunity is just not found in the typical insurance space. As I mentioned, not only is there an initial open enrollment opportunity if the program is first being offered to the employees, but there is an annual open enrollment opportunity that is then extended to those individuals as well. That can be done, and most typically is done in the fall of each year, but is not necessarily required to be at any given point in time during the year. It can be done during the fall of the year, it can be done in the spring of the year. If you want to, in fact, we encourage you to align it with some of the other group benefits that your participants have access to. The benefit schedule, which, and by the way, there are, in addition to the slide deck, which will be available to you as attendees, there are two different brochures, one of which is the program that we're talking about here, the life insurance program administered by the Prudential, which is the insurance company that underwrites the benefit. Certainly, we'd encourage you to look at those brochures. It will describe to you in much greater detail what the level of benefits are by the various age criteria and so forth. The other piece that we want to make sure we cover is that if the person is disabled for any reason, then the premium that is due becomes waived. So there would be no premium required if a person is disabled. Next slide, Sean. Great. One other piece I think is really important to cover, in addition to this fact that there's one premium rate regardless of age, so very simple to administer, but also demonstrating the stability and the soundness of the program in that the premium has never increased over 50 years. It also does include a will preparation benefit at no additional cost if an individual avails himself to that opportunity. Where allowed by state laws, domestic partner coverage is available as part of that spousal coverage, as we refer to. And before I get to the last bullet, I do want to mention one other item, and that is this program is certainly not by any way, shape, or form intended to replace a traditional employer-based group insurance offering, whether it's basic term life insurance or voluntary term life insurance. We encourage the employer to continue to offer those kind of coverages. This is just merely yet an additional offering that an employee can opt to participate in as they look at the financial needs and financial protection that they desire for their household. So again, very important to understand, we're not trying to undermine nor discourage people from looking at the core offerings. This is purely an additional offering that we think just complements the package very, very well. As mentioned earlier, certainly folks oftentimes have a lot of student loan debt early in their careers. In trying to respond to that, recently, effective 1/1/2020, we were able to successfully negotiate a provision within the plan that now is included to all policyholders, both currently and prospectively, that will say if an individual is disabled permanently while covered under the program and has a student loan outstanding that is not otherwise forgivable, there is up to a $50,000 reimbursement opportunity for that individual. So again, further trying to address the financial well-being of individuals, especially those earlier in their careers or at younger age cohorts as they embark on their careers. So that describes a variety of the features we think of the program. Sean, next slide. As I mentioned real briefly, just kind of the last feature is very unique again. As long as you have enrolled in the coverage and are currently covered upon retirement, you can then also continue the coverage into retirement. The same exact program. It's not a conversion issue. It's truly a continuation issue. So that's a nice opportunity. And there's no maximum age limit, which some group term life insurance programs typically have as well. So that gives you an array and a summary, I think, of all the features of the program. So why don't you go ahead to the next slide, Sean, if you could. So what is the cost? Certainly you probably will ask. Well, the cost is $17 per month. Again, it is one single cost per household. So regardless of the number of dependents that are currently or in the future covered under the plan, it remains $17 per month. And it is paid ideally, but not strictly, through either payroll deduction for active members. A pension deduction can be done if it's a retired member who continues the coverage on into retirement, if the pension system opts to do so, or if none of those, or if neither of those options are viable, certainly the individual can pay the premium on a monthly basis directly through an ACH transfer from their individual checking account into the third-party administrator that we use to support the program. So that's really the financial aspect of how the program operates. Okay. Next slide, please. So now let's get to the one-time opportunity. Typically, this program is offered in the fall of the year, not necessarily, but predominantly it's been offered in the fall of the year. We went to Prudential, who again underwrites the insurance protection through the program, and said, look, NCPERS supports the public sector. The public sector is doing a yeoman's job of supporting the United States by being first responders, by being essential service providers, et cetera, et cetera. What can we do to meet them where they're at now and identify another opportunity to obtain this financial protection in light of the increased exposure and visibility that the COVID-19 pandemic has created? What we were able to secure from them is the following. They are agreeable to, for any group that currently offers the protection and for whom the open enrollment is not currently underway, they are being allowed to have a special one-time open enrollment to give people during this elevated sense of awareness an opportunity to enroll in the coverage. So for those that currently offer the program, in addition to their typical annual open enrollment cycle, they could be electing to roll this out to their employees right now, and that window can remain open as long as until August 31st, 2020. Moreover, for those who see the need for this but have not up to this point offered this program to their participants, they now can go ahead and effective immediately opt to implement the coverage. We will work with you and your organization and your administrative functions to roll the program out and communicate it. And you can establish this as a very great opportunity for employees to show them that you care for them from a financial protection standpoint by making this available to them now. Again, same rules as I described earlier. The same cost will apply, the same level of coverage will apply, and most importantly, the same guarantee issue, no medical underwriting provisions will apply. So, for example, let's say someone has contracted the COVID virus, is asymptomatic today, or maybe even is symptomatic but has minor symptoms. If that were to elevate and tragically move into a more significant and or ultimately fatal situation, So long as they have enrolled in the program and are paying premiums, they would be eligible for a benefit out of the program, as an example. So again, very unique situation, not typically found in an insurance kind of environment. So that said, you would then, upon initial opportunity or initial enrollment, roll the program out. We would then work with you guys side going forward, what is the most appropriate time for you in terms of establishing your annual open enrollment cycle. And then that open enrollment cycle, whenever it would logically fall next, would then be a second window of opportunity, and then annually thereafter. So if you elected to do this now with a fall open enrollment, you would have the open enrollment now. You could give folks another opportunity this fall and then every fall thereafter, just as an example. So again, a very unique window of opportunity to allow folks to get coverage with no medical questions asked, no pre-existing condition limitations that might apply. Notwithstanding the kind of what we believe to be a great employee relations opportunity to show your members during these challenging times that you care, you're trying to provide for financial well-being for their needs. So that covers the life insurance program. So let's go ahead then and jump on to the next question, and that is the second program that we support and partner with delivering to the NCPERS members, and that is with regard to identity theft protection. So first of all, let me just touch on, again, the current state relative to identity theft. Again, many of us, certainly I'm a perfect example, are working remotely from home. In the public sector, that certainly is still, in many cases, not all, but in many cases, being asked of the employees as well. In turn, they are using, whether it is for work or even for personal activities, they're using their personal technology devices at ever, almost unprecedented levels as they do Zooms, as they do chats, as they look for information and so forth. And they're staying at home, which means they have more time to do both of the above. So as you see all of that exposure to technology, in turn, that creates an opportunity, unfortunately, that we are seeing a dramatic increase in the amount and a level of scams or phishing expeditions that we're seeing for those types that are so inclined to do so. Again, as they know people are spending more time online, they're finding ever sophisticated and unique ways to grab onto their attention, inadvertently obtain information from them, and then obviously, try to secure your financial or other types of benefits, unfortunately, in many cases, fraudulently and or illegally. In addition, you'll see there are already scams going on where people are filing unemployment for other folks whose identities they have stolen. So again, just another way of people kind of fraudulently obtaining information and ultimately financial resources that are not theirs. And lastly, I think with all the financial pressures and uncertainties that people are finding right now, it creates even another level of vulnerability because they may be more inclined to click on something that's maybe sounds too good to be true. In most cases it is, obviously, but again, the scammers are out there, fully are aware of that and are trying to take full advantage. You'll see a quote that we found to the right there where you can read it for yourself, but even the World Health Organization sees the evidence and propensity of this coming up at tremendously increased levels. I can even speak firsthand to the amount of things I'm seeing even at a corporate level, despite all of the filters that our corporate offices have, and certainly through my home email as well. So again, I think I can be a perfect case study that it is happening. Next slide, Sean. So several years ago, as we saw the need and opportunity for this for NCPERS members, because so much of pension systems as well as so much of their members are now doing things electronically. We did a very formal vetting process, went through a number of the leading vendors in the space, did an RFP and selected our Aurora Identity Guard as the selected vendor partner that we thought would make sense to deliver this program to NCPERS members. A couple of different aspects of theirs that really was attractive to us. Number one, while a lot of the vendors in the space will provide batch notification of activity that they detect. Identity Guard does real-time notification, if not in seconds, within minutes of identifying the potential detection and therefore potential breach. Number one, we think that's a very valuable feature. The other program, which we thought was even more profound, is they saw this evolving rapidly and saw the notion of artificial intelligence having a significant and integral role in these types of initiatives. They therefore reached out and developed a partnership with IBM's Watson, and to our knowledge are still the only firm in this space that has established that partnership with Watson. And we'll get into in a minute why that creates some additional value for you. Next slide, Sean. So as I mentioned, the time list of alerts we really think is key. Not unique, but certainly important is that all three credit bureaus are access to make sure we're following in any activities that might be worth noting. The frequency of the credit bureau reports, notwithstanding the alerts, the frequency of those reports and the scores that it presents are published and disseminated monthly, which is more frequent than some of the competitors. There is $1 million of insurance, and again, that on its surface may not sound unique because other vendors will say we have $1 million of insurance protection as well. The difference here is that the Identity Guard program not only provides you up to $1 million of insurance protection against expenses you incur while dealing with the incident, but it actually will reimburse or replace actual cash funds that are lost or stolen as a result of any type of an identity theft or breach. So there's a level of protection that certainly is more robust than a lot of the other programs that are out there. The other piece that we think is important is all of the programs, the monitoring, the forensics, the support that occur once the program once there is a breach, excuse me, the services that then are rendered to the participants are all done in-house. So they have a greater control over quality, timeliness, responsiveness internally because they're not outsourcing in turn some of those support services to third-party vendors. Next slide, Sean. Continuing on, and this gets really where we get into some of the artificial intelligence aspects. So beyond typical credit monitoring, what it's also doing is monitoring other non-financial activity. It does an extensive amount of monitoring what they call the dark web, which is really where a lot of the illegal activities occur. Oftentimes what happens is somebody who steals the identity doesn't necessarily perpetrate a subsequent breach or fraud. They obtain the information, they sell it, that information, that personal identifiable information on the dark web, and then the folks who buy it then start doing some things with it. The other part that's interesting to know is oftentimes they won't do anything with it immediately. So this is a prolonged exposure. So for example, just because you were exposed in a breach with Target, I'm just picking on Target as an example because it was pretty highly visible. Just because it's now been 6 or 12 or 18 months since you have not seen any fraudulent activity, it doesn't necessarily mean that the door has been closed. They can sort of stack this up and call upon it, well into the future. So I think that's really important to understand as well. And then the other part is, again, through this IBM Watson, what they've also done is try to add even further value by also giving you the opportunity to monitor activities through social media. So for example, if you do have children, you can set this up so that you can monitor the activity of, let's say, their social media, such as Facebook and what have you. So you can be alerted as to potential incidents of cyberbullying or other kind of things that might be really important for you to know and try to intercede early on to either help mitigate a situation or prevent a situation. So far beyond just identity theft, this is another value-added aspect of the IBM Watson relationship that we think adds some additional value from an overall financial and emotional well-being perspective. Next slide, Sean. So Without getting into the detail, we'll defer to having you go ahead and pull up either the Identity Guard brochure or the slide presentation, which will be available to all of you after the session. But this just gives you an idea of some of the areas that they are monitoring, perusing the data out there, and then providing you information or alerts to the extent that they see activity that would be suspect or concerning. You can see the anti-phishing mobile app, the credit monitoring we talked about, the dark web monitoring, some of the social media reputation scores, a variety of different things here that all kind of work towards a comprehensive solution. So I won't spend a lot of time on it, but certainly refer you back to that. So the program, next slide, Sean, is currently available in kind of 2 tiers. You'll see the total, and again, I won't go through this in great detail, but you'll see there's a total option and a premier option. The total option buys you a comprehensive array of the opportunities that are presented by the program. You'll see just at the bottom, there are a couple that do not apply to the total program. If you were then to opt up to the Premier program, you will then even fill in those last 2 spots. But regardless of the offering, very comprehensive, with Premier being just slightly more comprehensive. And again, you'll see just a list of the highlights of the things that you purchase with those respective levels of coverage. Okay, so next slide. The cost that we have negotiated with Identity Guard that's available to NCPERS members, in our view, as we have continued to monitor the marketplace, are very competitive in general, in our view, and are even more competitive when you consider the value add differences in the programs versus, again, many of the programs that you might find as competitors. So the program is available in 2 different tiers. You can either purchase it for yourself as an individual employee, and you'll see the rates there for total and the Premier, an incrementally higher amount for the Premier. Or if you want to add eligible dependents in your household, you can then opt to the family level of protection, have them also then created within your account. And in that case, you'll see the premium becomes incrementally higher to afford the protection to not only yourself, but to your spouse or other eligible dependents in the household. And those, again, are monthly rates. The other piece I might mention before going on is these are rates that if you were to offer the program to your employees on a voluntary basis. So in other words, just through payroll deduction, they are electing the coverage and going ahead and activating the account. If you were to elect to say this has enough value that we think we should actually be offering this kind of protection as an employer or system related benefit, which we have had some conversations around and which some employers we have actually worked with in doing, it's important to note that the rates markedly are reduced to the point where you would be surprised. It's probably less than half the cost of the individual plan at the total rate, for example. So if that is something that for a nominal additional cost you would see as a value add to roll out to your employees, just to show them that you support their initiatives and are trying to meet them where they're at from a total reward standpoint, certainly contact Sean or I and we can get you the information around the cost of that program. But it is very, very competitive if someone was interested and had the opportunity to pursue that. Excuse me. Okay, Sean, go ahead. So the one-time opportunity, similar to the life plan, we've reached out to Identity Guard, said this is a very unprecedented time. What might we do to meet public employers and public employer retirement systems where they're at today? Unfortunately, because of scale, we are able to offer this opportunity only to systems or employers with 200 or more employees, and that could be active and or retired employees, just 200 or more individuals that you are going to offer this option to. If you offer the option, what will happen is between implementation and January 1st of 2021, Identity Guard will offer the program to you at no cost for the total program for single coverage only. The only other condition beyond the size threshold is that we will require you to have available to implement the program and administer the program, either for active employees, an opportunity to pay for the cost going forward on a payroll deduction slot, or for retirees on a pension deduction basis. So unfortunately, because of the scale and the efficiencies that this program requires, something like a direct pay basis where people are just setting up an ACH account or billing their credit card, unfortunately, this offer does not apply. So the two thresholds are payroll or pension deduction, and you have 200 or more members that you can make the program available to. If those two criteria are met, the total plan will then be available to the member at no cost through the end of this year, through 2020. Then in the fall of the year, we would simply then require you to conduct an open enrollment for those folks, saying, you know, we've been pleased to offer this program to you at no cost through the end of the year, but the program now will continue to be available to you effective January 1st. Here are the rates, and here's simply what you need to do in order to continue to maintain the coverage for yourself and or your dependents beyond January 1st of 2021. So that opportunity for continuing the coverage on their own costs would then be required to be conducted via open enrollment this fall. Now, again, in those situations where potentially you would decide, you know what, we think there's so much value in this that we're going to offer this program to our employees at no cost, obviously, then the open enrollment cycle would be changed a little bit, and we'd have to talk about how that would work for you. But because that's a different scenario, obviously open enrollment kind of takes on a different sort of theme, if you will. Okay, so in a nutshell, that's really what we wanted to cover today. So two different programs meeting dramatically different needs, but all in our view kind of rolling up to help you address the challenge from a human relations standpoint, employer relations standpoint, addressing financial and emotional well-being in what we think is a very novel and certainly cost-effective way. So Sean Atkins, who I mentioned, works with me very, very closely in partnering with NCPERS. Either of us are able to take questions after the fact, and I want to thank Sean in particular for helping me work through the slides here at this point. And so Sean, unless you think there's anything missing, I'm going to turn it back over to Hank.
I think we're good. Thank you.
Great. So Hank, any other questions that you might have, or I'll turn it back to you to kind of wrap it up and close.
Great, thanks, Don. Thank you, Sean. So let's, we do have a couple of questions relative to the life insurance plan and the educational student loan benefit. Can you expand on that a little bit? And as you're doing that, is that typical of life insurance? Is that type of benefit typical of other life insurance programs?
Yeah, that's a great question, Hank. 3 to 4 years ago, we actually went to Prudential, the insurance underwriter of the program, and said, you know, we're reading all over the place, we're experiencing this phenomenon, but we are aware of nothing out there, and we would like to pursue it. And at first, they feel like insurance companies do, as conservatively as they typically think. They say, well, yeah, but we couldn't do that. And we pressed them on the issue, both from a financial standpoint, saying, you know, look, we believe the risk is manageable, number one, and then the next question was, well, from a regulatory standpoint, we're really not equipped to even allow this because of regulatory insurance considerations. We said, well, let's get the financial piece off the table. We want to know about the regulatory piece. What are the hurdles there? And long story short, we worked with them, encouraged them strongly, and they went out and actually sought the regulatory approval necessary. And to our knowledge, and as they worked with the regulators, even from the regulators' perspective, this is the first life insurance program that attached a student loan reimbursement feature to it. So it's very unique, very novel, and we think it's leading edge in terms of meeting, you know, what is a very interesting need out there. If you look at it, student loans are the second largest debt that's being serviced in this country right now. So, you know, if you think about mortgages and credit cards, that's up there right among the top three, and actually is number 2 of the 3. So we thought it was a great opportunity to look at something like that, and we're really pleased that we were able to roll that out there. So again, in the event of an individual having student loans that are not otherwise forgivable, if they're disabled, they would be accessible. They would have access to up to $50,000 of reimbursement towards outstanding student loans.
Great, thank you, Don. Now going to Identity Guard, the monitoring of social media. How quickly are new platforms integrated into the monitoring? You know, and how do parents, you know, asked to monitor new platforms?
Sure. Great question. Certainly, Identity Guard, as they work in tandem with IBM Watson, are trying to make sure that they can be aware of new platforms and social media outlets that exist. Number one, and then identifying what are the kind of things through artificial intelligence that they can maybe be thinking about monitoring. Number one, in terms of how you go about doing it, really, it is it's incumbent upon the employee to sit down with their dependent children and identify and provide to Identity Guard what accounts they have in their their login information, because obviously they can only monitor what they know. So the employee would have to say, here for my 3 children or my 2 children, whoever they are, here are the accounts that they have open, or the social platforms that they participate in, and set that up in their master account with Identity Guard, so that then in turn they can start doing their monitoring activities. Sean, anything to add to that?
The only thing I would add is that the mainstream social media platforms are certainly being monitored by Identity Guard, but some of those maybe off the grid social media platforms, and there's all kinds of them that spring up and shut down, spring up, shut down, those kind of things. Those may not be as actively monitored. So that to Don's point, just making sure you're sitting down with your dependent children and making sure that those passwords, or maybe not passwords, it's the wrong word, but those profiles, I should say, and what those are passed on to Identity Guard, and to the extent that they can monitor them, they certainly will get them out there. But having that important, very important dialogue with your dependents in terms of what social media sites they're on, it's very critical. But the Facebooks of the world and those kind of things are certainly being actively monitored by Identity Guard. But some of those less known and maybe smaller off the grid kind of social media platforms, that that's why it's so critical to make sure you have those communication lines opened up.
Great, thank you, Don. Thank you, Sean. Last question. If a plan were interested in either or both of these, what's the process? Is there an RFP that needs to go out, or how do they start engaging?
Yeah, great question. Certainly, we can't speak to each local jurisdiction's requirements or philosophies, but our view is that because of the fact that this is available through a national association to which they're a member, that there wouldn't be an RFP required, because we continue to monitor it, we continue to vet it, and in the case of Identity Guard, we actually did conduct a formal RFP for the program just within the last handful of years. So, we believe that argument can be met in kind of just not only the due diligence that we continue to do, but also in the recent RFP that was conducted. So, of the groups that have implemented this far, all of those local jurisdictions have deemed the process and the vetting and the availability of the program through NCPERS as sufficient to bypass any RFP requirements. But certainly we can't speak to say that is going to be the path for every given entity. We certainly think there's logic in being able to argue that there's not an RFP requirement, but certainly that's up to the local jurisdiction. The other thing I can tell you why, especially with regard to the Public Employee Financial Protection Plan, where an RFP would really be almost rendered useless, is the program is so unique and the way that it is filed that really there is no other program identically like it. So if you wanted to replicate the program, the only way you're going to essentially do so is for another life insurance carrier to go out and learn the program, rate the program, and then get the program filed in the applicable jurisdictions, which may or may not occur. But again, because it is so unique, I think it really does legitimately make the case for sole sourcing as a viable way to put this program into place.
Great. Thank you, Don. Thank you, Sean, both of you for this great presentation today. There are no other questions, so we've reached the end of our webcast. Thank you, everyone, for joining us today. The Center for Online Learning will be taking a 2-week hiatus while we host the NCPERS Accredited Fiduciary Program virtually this week and next. We'll be back with our webinars on Tuesday, June 2nd. Thank you, everyone. Thanks, Don. Thanks, Sean.
Thank you.
Thanks, everyone.